Yo, yo, yo. So today I'm going to be making a video on Fibonacci retracements. I noticed in a lot of my other videos, like my back testing ones, I have the fib, I enter off the fib, but I don't really explain what the fib is and what it does. So basically, here's the definition of fib. AI summary, it's basically just a sequence. It follows the Fibonacci sequence. The ratios of which it's kind of expected price to retrace up into. The most powerful is around 61%. 50% is considered a price rebalance. So if there's a pretty unbalanced range, pumping or dumping, when it comes up to the 50%, you can also expect it to retrace. And how you get these levels is you want to draw from range to range. So I could draw from lunch high, right, to lunch low. But here you see that price disrespected fib. Even though we came back down below it, we still didn't reject off it completely. Which also goes with my model about why it went that way. I explain everything in the PDF I have. You need other things to align. You need bias. You need other confluences before you try to just only use a fib to enter. So here, you can kind of see, I'll do an example here. Hop on the 4-hour time frame. See this bearish closure, right? Looks like we're just displacing lower. Hop on the hourly as well. Super bearish as well. We take out that low. Swept PM low as well. Let me see. Then, see. So here, if you're bearish towards lunch low, right, you could drag the fib from here to the bottom of this range here. You need a lot of strong conviction, but I'm in replay, and it didn't even replay. Got you. All right. So you draw from the top of this range. Usually 5-minute works very well. 15-minute. Higher the time frame, the broader, like usually the bigger the range it is. So like here you see London, well, on the 15-minute time frame, right? Price just didn't even come into this area to rebalance this move, but we continued dumping. So that just tells us we're super bearish, can't even rebalance EQ before we dump, sell off. Let me see. So on this move here, it's a pretty good example. You grab the fib from this high right here to this low. You see that this entry right here, you usually enter either off of OTE or the 0.618. The only reason that I definitely probably wouldn't take this is because there's pretty much no other confluences around. It's just chop, so you're kind of dragging a pretty choppy range. Let me see if I can find another example quick to show you. Here's a really good one. New York AM range here. You see that we're displacing lower, right? So after we take London high up here, we swept out London high like this, right? Perfect. You see how bearish we are afterwards. So we could drag the fib from the top of New York AM to the bottom of New York AM. And you see we have this EQ rejection, which you would also pair with other things like, where'd we go? Over here. With other things like this 15-minute gap, right? So maybe you don't expect price to go all the way up into this 0.618, right? Maybe you only expect it to rebalance the 15 off EQ and then dump. So, I mean, a lot of this stuff is pretty discretionary. At the same time, like, you see the fib play out all day, every day. On the ranges, it just has to align specifically with what you want to happen, all your higher time frame analysis, right? Because look, we top tick EQ here, but you can also see a lot of examples where the fib fails, right? Let me see. There's a lot of examples where the fib fails. So like even here, failed, right? Because you'd probably enter around here or here. Depending how big your stop is, it looks like you would have gotten stopped unless you had a 20, 30-point stop, which I don't do. So that fib would have failed there. So without context, a fib is nothing. You know what I mean? Like, you kind of need conviction. You need a lot of analysis. You need strong draw liquidity, as well as a lot of screen time to know which fib setups are going to work and which are not, especially on the lower time frames like 5-minute, 15-minute. Pretty much any range can look like it's going to work with a fib. Um, but you do see a lot of these play out just looking at charts, right? I mean, we didn't tap EQ, but went to the area, super bullish out of it. Now we scale this range, top tick fib, dump. I mean, it's just like super discretionary once you learn which fibs are going to work and why they will work. I mean, this one failed pretty obviously too, right? You drag from this high to this low. If your draw liquidity's off, I mean, you're just going to get cooked. It's going to go right through your fib. So you need to mix fib, higher time frame analysis, draw liquidity. I explain all that again in my document, but I'm only going to send that out in my Discord server. It's free, but I don't really want to try to explain it in my YouTube videos. So I think my Discord link's in the bio, so everybody join that. You get the chance, and yeah, it's my explanation of the fib. Hope you guys understood it.